Good morning. Today is Saturday, May 16th. It is 7 a.m. Wanted to do a quick video to kind of show you my thoughts. I think we have about 5 to 7 different charts that I wanted to show you this week. Interesting price action. This week was ugly, but we did hold key areas, and that's really all that matters. I think during these times when we are range bound, and I'll show all that, meaning we're trading in a fairly narrow trading range, and I do believe we're going to stay there for quite some time. It's going to be very frustrating. I mean, you might see the same around price levels for the next several months. It would not surprise me to see us remain range bound for quite some time, and it's frustrating. From a personal standpoint, I have not traded very much at all. It's the least I have traded in my entire career. There are opportunities, but I continue to question the risk reward given the fundamentals. Now, I'm a big believer in watching price action, and price action has held key levels. So we're at this battle here where, there's the majority are actually bearish, meaning against the market, or just sitting in cash, which from a contrarian standpoint is probably the reason why we are not selling off hard. Meaning we might get a 5% dip, but because there's so much cash in the sidelines, many are quickly saying, hey, I already missed a big opportunity, I can't miss anymore, and they keeps the market afloat. So it's very interesting price action going on. We realistically, whether you're getting emotional or not, we are trading in a very tight range. So keep things simple. Good price action this week, even though it was tested much lower, and we'll show this to you. So what I'm showing you right now is a combination of the major indexes, gold, silver, and 20-year basically treasury bonds, treasury yields, treasury bonds. So the tickers with the number sign like this, and like this are the indexes. So you can see that the NASDAQ actually had a nice comeback. The NASDAQ was down at one point this week 6 to 8%, and this is actually a big area that we have a lot of money in, not in this ticker specifically, just the sector in general. Technology generally is where we want to be. The S&P 500 was down 2.26%. The Dow was down 3.6%. So this is a continual theme here. The NASDAQ continues to outpace. This is where money will flow. Now, was it an ugly week? Yes, but you're going to have that after a 33% gain, 32% gain off the bottom. And that's where I'm like, is it a little overdone? Probably, but the majority are still so bearish. We are no longer overbought here. The market could short-term go up a little bit. So you're seeing sectors like real estate, more conservative areas, have just gotten spanked, and they will probably continue to struggle based on the environment we're in. Real estate doesn't do well unless people can pay you. And so it's very, very interesting. Gold and silver, look at the scooter ratings, which is basically strength over a certain period of time. Very, very strong, including the TLT, which is 20-year bond. So these areas continue to show strength in addition to areas such as software, biotech, semiconductors, medical products, healthcare, and select FANG names, Facebook, Amazon, Netflix, and Google. So there are opportunities, but I continue to struggle on a day-to-day basis saying I'm interested at these levels. I might slowly start adding and then take quick gains, but again, I'm just being honest with you. I do think short term there might be some bullishness because there's so much cash on the sidelines and price action hasn't been horrible. Midterm, I'm very concerned on what I'm seeing. I think people just assume we go back to work and everything gets back to normal. It's much more complicated than that. But at this current time, price action is not bad, and that's what we need to follow and not get emotional. So the next chart I want to show you is the sectors. Look at the areas this week. Which ones? It was an ugly week. I mean, under the table, this is not pretty. But realistically, the areas that we continually say, hey, the opportunity is in healthcare, communications, staples actually continue to do okay because there are concerns and those companies are going to do okay. Technology, we said continuously we want to see financials and industrials do well. They continue to struggle. They get a 1 to 2 day bounce and just get hammered. So interesting to see. The strength remains where we thought it would remain, and the struggles are still in the areas we thought would struggle. In short, follow where the money is going. But you do have to be careful. I do think things are overvalued, but that does not mean we don't go higher. There's so much in cash. I think we actually can go quite a bit higher. So we have to be open to that. I'm a little concerned. This hasn't been shown in the price action, but I'm a little concerned that this could be a sell the news event, meaning we all go back to work and people quickly realize, hey, the economy is in a difficult spot. Again, the market is not the economy, as you can see. We have still horrible unemployment, horrible fundamentals, but the market is actually doing pretty well. So let that be a lesson if you're thinking, oh, the economy is going to tank. That could happen and the market could still do well. So keep that in mind. The next chart we want to show you is more the price action. Realistically, this has not changed that much. I'm going to blow this up a little bit. There we go. This is a chart we continually show clients. And in short, these are some of the most frustrating times where we remain in a trade range bound area. Okay. So for 2 years, we've basically traded in a range. We continuously go back to this range between 27.28 and 30.27. Look where we're at now. We've been testing. This is more recent. The high that we've tested is the 29.54. We got as low as 27.66 this week. Rebounded and closed. Nice close actually on Friday. 28.63. So here is where, if you need kind of the story, we got out about, we had 50% in cash at 33.80. Was fortunate to prevent a big portion of this dip. Still lost. Nobody's going to time it perfect. But we did add right around 23.25. And not in the S&P 500, but in select names. We got out a little bit early around the 2600 and said, hey, because we had done so well on the downside, I'm not going to get too greedy after a significant gain. And we are in this trade range. Did we miss out on some? Yes, but the areas we have been in have been the right areas, which has helped us. So we basically have about 10% invested that works like a 30% because it's leveraged. So it's in the right areas. It's doing well. My thought is this: if we trade above the 28.63 area, it would not surprise me to see price action move a decent amount higher, potentially to 29.22, and slowly move forward. It very well could happen short term because there's so much in cash. Support levels, if we do break, what's the level that I'm watching? If we do break 28.09 is the level I want to watch. So really these are the two levels important to me, the 28.63 and the 28.09. If we break below 28.09, I think it does get ugly. So we're going to watch and not get emotional and just watch price action. A few other charts that we have. Gold continues to show strength. Good scooter rating of 96. That's very strong and could have some more upside. A lot of people do like this. It's getting close to the top here. Doesn't mean it won't go higher. Would not be surprised if it does go higher. Next chart, small caps. Continues to be an area of struggle. You're seeing it's right at resistance or right at a potential breakout. You see it continues to test this gap right here. We break out, can't hold, retest. This is not really great price action, but it hasn't fallen apart yet. So no assumptions at this point. The NASDAQ, a continual area of strength, basically following the 10-day moving average test. It did test the 20-day and bounce. We even said midweek, watch 216. Watch 216 and see what happens. The 20-day is the goldish line here. So price action has been good there. We must be real about that. So again, short term, I think we could see some upside. We'll see if it can break key levels. Short term or midterm, I'm still not bearish, but I do think we will test bottom of range, 27.28 or 26.50. It might be too easy though. Many people believe that same thing, and so we got to be careful and aware that the market will probably do the opposite of the majority. And the reason not the reason, but I continuously show this. Last week we showed you the bearish side was basically at 52, which means the general retail side is basically quite bearish. And it says basically pessimism is above 50% for the 6th time in 10 weeks. So optimism is very, very low, kind of understandable, but that will likely keep us in a range or could push us a little bit higher from a contrarian standpoint. If you don't follow Joe Fahmy, do follow him. He's great and hilarious. That's all we have for this week. We're going to keep things very simple and I understand that it is frustrating. It's frustrating for me that I am not necessarily trading on a day-to-day basis, but I believe sometimes there are times where you are better off watching price action, not making a dumb decision. I do believe we're range bound, not really going to go too much higher, too much lower. It could remain there for quite some time. You got to remember, if I go back to this chart, we continuously have tested the highs and lows for quite some time. I mean, for 2 years. It will lead to good things, but right now, I'm a little concerned that we might be testing a little lower. Realistically, price action has been very, very good, but I still believe midterm that we will see lower pricing. But short term, I think that there could be an opportunity in some names. Semiconductors did get drilled on Friday, and that could be an interesting area. So have a great week. I know it's frustrating every day. Imagine from my standpoint, every day we basically put a chart or put together a group of stocks, about 60. Every day it changes, and we've been doing that for a month and have not really changed much at all. Have we missed out on some? Yes, which is frustrating, but we have to be very, very cautious in these areas. We believe there are good environments and bad environments to get in, and at this point we are kind of in a in-between level, to be honest with you. And finally, the put-call ratio, the one chart I did not show. This gives you a better idea of more professional trading, what they believe, and it's actually below average. 60 is about average. We're at 57, so meaning there is less protection out there, less puts. So that's very interesting that professional traders are a little more neutral than I believe what the general public is. And so at this point, we're at a crossroads, bulls versus bears, and that usually leads to sideways movement. I hope we do see sideways movement. That will lead to good things. If we just skyrocket from here, I don't think it holds. But if we go sideways, maybe a little bit lower, I think it will entice people to get money in the market. So we're watching every day. It is a whirlwind, but there are opportunities. It's just whether the risk reward is worth it. And that's what we continuously on a day-to-day basis question. We have not felt the risk reward is worth it at this time, but that could very well, if we break out on Monday, might push many to get in and say, hey, we're going to 3,000 here. So have a great weekend. Get outside if you can. Let us know if you have questions or concern. Again, there are times to be in the market, and there are times where we believe that cash needs to be a position. And we do have a large amount in cash at this point, and I'm okay with that. So let us know if you have questions. I know some of you are newer clients and like, man, he hasn't done much activity at all. That is very true. And usually it's not like that. But I think this is a time where we have to be quite cautious and kind of wait for price action to dictate the move. So let us know if you have questions. Have a great weekend. See ya.